capital markets, but also with the relationship between the United States and Mexico. A relationship that is shared in the past years and that has opportunities and has challenges. My first question is going to be for the three of you, Javier, Hector, and Stephen. What are the prominent trends currently shaping the U.S. residential real estate market? If each of you can please answer briefly. Javier?
Good afternoon, everybody. One of the trends that we're seeing in the market is, aside from the tremendous demand for housing that is in the United States, the elevated cost of construction and insurance has promoted more development of rental properties. As people are unable to afford their houses, there's a lot of shifts from housing only to rental. As the millennials coming into the market, they have also found more appealing to continue to rent in large amounts rather than purchasing their houses. And another of the trends that has happened is the vacancies in office buildings in urban areas for more suburban areas. And this has caused a tremendous change in dynamics in urban areas, from being live to being empty, and from office buildings in urban areas being converted into residential properties. We're seeing a lot of that.
Hector, you can explain to us the perspective from being in Mexico and having a family office that invests in the United States. Have you seen any changes or challenges that have been significant during this past year?
Sure. What we've seen is very strong migration, both from the corporate world and the living sector to the states in the south. We're seeing a definite migration from the northern, more expensive states, also from California to what's called the Sunbelt, which we're going to discuss. So there's definitely a trend in corporations moving their headquarters to Texas, to Florida, to the Sunbelt, as well as people living in those states. That's the reasons are taxes, the reasons is weather, the reasons is what's left from the pandemic and people living and working from home. So very big trend. And that has helped Mexican investors to focus also on those Sunbelt states, which is some of the things we're going to discuss.
Stephen, some of these trends are very significant, especially for your business model, right? What's your opinion on this?
No, I think the bad thing about being the third to answer is that they didn't stole my answers. But yeah, affordability is the main trend that we've been looking for. So I think that the migration is looking not just for the weather with the taxes, but also for places that are cheaper to live than in California and in New York and Northeast Chicago. So for our business model, it works perfectly because we are exactly investing in the Sunbelt area, Florida and the Sunbelt. I mean, we've been trying to provide housing through either multifamilies, right, which is to take advantage of the whole trend of people having to rent versus buy, right, and also build-to-rent homes, I mean, communities like that. So again, the rental has been a big thing because the gap between buying a home where you have to pay your mortgage versus renting is at its highest level ever. So essentially, that's why affordability is the main issue nowadays, given the demand for housing and the incapacity for people to actually acquire a new home.
We are also away from having a very important presidential election in the United States. What is your opinion, Stefan, regarding the changes or not changes that we might see in the real estate market in the United States?
So, two different policies here, right? I mean, you have Trump being, in a way, very pro-real estate, right? Pro-market, pro-real estate. And on the other hand, you have, Kamala and the Democrats speaking about the classical populism, saying, oh, we're going to think about rents are too high. Housing is a problem. So let's control the rents. That is obviously a typical populistic, rhetoric that if placed in effect, it generates the exact opposite effect at the end. It simply puts developers and investors like ourselves out of it. We're not going to do it because it makes no sense in the end. So but honestly, I think it's much more of a political speech versus practicality. Because in the end, in the U.S., whoever actually decides what happens or not is the Congress, right? So which is good in a way.
Yes, there's a lot of legislative process that we're going to have to follow. Let's change the subject and let's discuss the opportunities that we're seeing in different areas in the United States. Which regions or cities have you had, Hector, of high potential for real estate investments, and what are the factors that are driving the growth in these areas? If you want to start, Javier.
Well, like we spoke before, Florida and the Sun Belt, from Arizona all the way to Georgia and North Carolina, are states that are very investment friendly, and they have an enormous amount of good migration. We're talking about university-educated people within their prime working ages, with good credit records and some savings. The cost of construction, besides South Florida, which is prohibitive, makes it more affordable for us to develop up north. And there are multiple programs where we are able to register the projects with the government agencies, like the Urban Housing Development Agency, which allows us to provide to our buyers high levels of financing, like 95, 97% financing with subsidized interest rates. So we're talking about half a point or a point below the market rates. That happens in every zip code in this area within a price range. So as long as we are within the price range, we are able to join those benefits. We're also seeing the trend of the remote working. Many companies like Tesla and Amazon were trying to go to war at the beginning of the year with them, and many have quit it because they have become accustomed to the lifestyle that they have had, and we are going to see that trend to continue. And we're seeing it because statistically, the urban cores, with respect to the industrial market, are continuing to see higher vacancy rates. So that shows you that people are not going back to work. They're still trying to negotiate if they can work at the office partially, but mainly that is going to continue being a trend.
Hector, we're talking about the Sun Belt area. Do you want to expand on that?
Yes. The migration that we discussed, people coming from the northern states, companies setting shop in the states, has provided an advantage to Mexico. Those mainly Texas and Florida are the states that Mexicans like the most. They like the most for investment, for personal, for having an apartment, but really now for investing. And the other thing that has happened is the economic uncertainty in the Mexican market has forced a lot of our investors to say we want to diversify. People come to JLA and say, don't show me only projects in Mexico, show me things in the U.S. So, unfortunately, the uncertainty in the economic policies in the legislative discussion that we're having, that's judicial reform, are pushing investment out. And these two states mainly are being benefited. Why? Because people go to Texas, people go to Houston, to Dallas, to San Antonio, and they go to Florida. And they like product there, and they like apartments to live, but they're also looking actively at investments.
Thank you. Stefan, from which regions do you see the highest volume of investors? And are you seeing shifts in the investor behavior?
So I think it's interesting to mention that the U.S. commercial real estate is 48% of the world's total market. It's huge. So that shows how the entire world actually likes to invest in America, in North America, the United States, in the real estate sector. So since we started Leicester Group like almost 10 years ago, we've been always and based in Miami, right? Our headquarters in Miami. We always see, what's happening in a certain Latin American country, politically mostly, right? There's always a wave. So we've had the Brazilian wave, we've had the Chilean wave, we've had the Colombian wave, and it's always very much related to elections, the rhetorics, right? I mean, all of that. So currently, we've seen a lot of interest by Mexican buyers in the Florida and investors in the Florida region. The Colombians are also very much active. Argentinians are always there, even though now there's a little bit, seems to be a bit more calm down there. But it's a mix of everything everybody likes. But right now, I would say Mexico and Colombia.
Okay, let's talk more about the challenges and the risks that we're having in the real estate market. Javier, Hector, Stefan, what are the most pressing challenges facing the residential sector today? We're talking about rising insurance costs, maintenance expenses, which of course sometimes hold back some of these investors. I'm going to start with you, Stefan, this time.
I'm going to add another one, which is interest rate. Interest rate and construction costs, right? I mean, that is a perfect storm for real estate investments. It's incredible how credit, real estate in the U.S. is very much correlated to credit, the availability of credit, right? I mean, last year we've seen a few of the smaller regional banks in the U.S. go down because of their mismatch between assets and liability. The hike in interest rate in the U.S., it's been the highest in such a short period of time, and it caught the entire industry kind of off guard. So I think that is today one of the most challenging aspects, aside from the real estate sector itself, which all of my other colleagues of the panel to discuss. So I mean, it's coming down. It's coming down probably slower than what is actually expected and needed actually for a lot of the real estate investors in the U.S. But it also presents an opportunity because that brings some distress. And at distress, there's always the possibility to buy an asset below replacement cost.
Hector, do you see the same challenges when you go to your investors, which are mainly from Mexico?
Yeah, our investors are mainly Mexican. And to us, I'm going to approach the risk profile from a different perspective. It's very easy to invest in the U.S. It's very easy to lose money in the U.S. also. You have to carefully select who you're partnering with, who's the sponsor of the project. In this process in which everybody started investing in the U.S., in Texas and Florida, we saw a lot of companies come to us and say, we're developing this project in Houston. Okay, great. Where's your office? Well, down here in Bosques de las Lomas, no? No, we don't know. We need a guy who's a developer there, who knows the permits, who can interact with the banks, who's very active, who's proven. And to our Mexican investors, we're always very careful of choosing the right partner. I think that's a big risk, and it's very easy to invest in correctly.
What challenges are you seeing in particular, and also how as developers the challenges are being mitigated?
Well, besides what Stefan and Hector contributed, one of the things that I see to be the most challenging thing is zoning approvals. We have within the United States lands that are not zoned as public parks or agricultural land are zoned over 70, it's about 73% single family home. So when you have such a vast amount of land urbanized and not being profited from, it reduces the supply that would allow the developers to build massively and supply enough to lower the cost, to lower the price. And this is a huge challenge, because then we're not just talking about inflation, which may come in the form of greed or cost of products imported or so on, or labor, but also on a political level. How do we change the zones in areas that can incorporate larger amount density so that we can provide more supply? We have, before COVID, we had a 10-year supply deficit. When COVID came, it became enormous, because most companies, most projects were halted because of lack of labor, materials. A lot of the materials, either the material itself or components of that material, came from abroad, mostly from China. Those ports were closed. So we suffer with a lot of projects having been halted. And so that even increased the deficit in the housing supply. To get to a faster pace, we need the support of the communities and the political arms. And that is a struggle, because everybody agrees that we need to change the zoning, but they don't want it in their neighborhood. They want it in the neighbor's neighborhood, but not in theirs. And I believe that to be one of the largest challenges.
And there's one more challenge that I wanted, if you can explain it as well, because you work with the broker community, which is a recent law that was passed in Florida regarding the real estate agent commissions. How are you handling that right now?
Well, I think the gentleman who was presenting before, I'm sure there is other companies that have implemented technology like Zillow into providing data and access to existing inventory available for purchase or sell. And until now, there had been some laws that had guaranteed the realtors their participation into the market. That is no longer the case. And so when it comes to general real estate, which is existing properties, they are having to struggle because they have to sell their services before they can start showing houses or showing apartments. They have to convince now the potential buyer that they are the right person to go with in order to be represented in the transaction. When today there's so much data and information in these applications that buyers are feeling freer to go directly to the sellers and bypassing these brokers. So one shift we're seeing is that a lot of people are leaving the industry, and if you have ever gone or have relatives in South Florida, you will realize you either have a friend or a cousin or a nephew that is a realtor participating in the industry, probably part-time. That is going to diminish tremendously. And another shift where they are guarding their commissions and their time, it's going to be that they're going to focus in new developments where the engagement comes from the seller, where we are willing to sign the commission because we had already incorporated it into our performance. We already anticipate paying these commissions, so they don't have to go to the buyers and get these engagements directly. We can do that. So we're going to see that shift. But we're going to see a lot less participants and a lot more applications that would allow buyers to go directly to sellers.
And we're also seeing a big shift that has to do with technology. So which technological tools in the real estate market are you most excited, happy, looking forward to, or definitely not liking them? For the three of you, if you want to go first.
I mean, it's incredible what technology can do for you, right? I mean, we've been applying to every multifamily we own. These, just like the airlines do, basically, where it checks where the market is every single day, right? Where your competitors are in terms of occupancy, prices. So every single day, prices have been changing. So this way, you have the most efficient potential pricing per apartment on a multifamily. It's incredible what it does, and it helps you tremendously.
So it's basically data. Hector, and you?
I think something that's very attractive is driven by technology like crowdfunding. We haven't seen that materialize in bigger projects, but it allows access to a very large spectrum of people to go invest. That didn't happen before. You have to have a big amount of money to invest now. these technological tools allow you to look at projects in a different manner.
How are you using it, Javier, if you are?
I will contribute that artificial intelligence is able to consume data so quickly that it's not just analyzing data and now is proposing investments. And that is a huge shift because it's really accessible to large institutions as well as to small players. So it's leveling the playing field. There's some things that are not helpful to society, like smart rent, which are community of rental property owners that integrate all their system and share their data. So at no one time they are all providing an excessive amount of supply of rent. So they can automatically provide to the market stable supply without having to drop their prices. So it controls multiple players' inventory to always provide an increase in rent and a lack of supply. There have been companies like that, Smart Rent, are being sued because of these, it's creating a monopoly. But I think it's inevitable what's going to happen. So there's a positive and negative side.
And technology continues to be an opportunity and is going to be changing forever. So every person that is in this industry has to adapt. Let's shift now for the investment opportunities, because even though we're going through an awkward year because of elections not only in the United States but in other parts of the region, we can see investment opportunities. Which of the areas are more promising for your investment opportunities within the current market? And in which areas have you personally invested in, if you want to tell us a little, Stefan?
I think one of the things that, from the interest rate hike, that is obviously makes the life of a developer and real estate investor in general harder if you're on the equity side. However, on the debt side, because of the problems with the banks, as I've mentioned before, it gives you a tremendous opportunity to invest and create a fantastic vintage where you can get double-digit returns being on a much safer position on the investment. So that is where we've been bringing a lot of our capital lately, financing warehouses for FedEx, the construction for a Tesla car facility. So things like that, always on the debt side, but on the other hand, and I think my panel here will mention, on the development as well, because there has been such a slow in terms of new developments because of the construction costs and the financing costs. So there's going to be a huge gap down the road 2-3 years from today of lack of inventory. So if you start now, you're probably going to be in a very good position.
Hector?
I think people are continuing to like and invest multifamily. I think that's a very good market. If you do it correctly, it's quite safe in the way you enter, and there's easy exits to the projects. I think that industrial is being chased all around, both in Mexico with nearshoring, but also in the U.S. with inshoring, and also I think those are the top of the sectors. I think investing in hotels is more difficult. It's larger tickets with more complex operation. So I think the normal industry in Mexico is looking at opportunities in either multifamily or industry.
Javier?
Well, lately with this spike of interest rates, we focus on the higher end spectrum, the top 5% of the population, where that kind of events do not affect them so much. The increase of cost, the increase of insurance, the increase of homeowner association fees due to mandatory reserves and interest rates. And we are seeing that we're able to mitigate a risk by engaging in the acquisition of the land for longer periods of time, so we don't have to pay for that land while we do plans and permitting, and we are able to pre-sell our projects easily, asking for large deposits, 40 to 50%, which we are allowed to use in the construction, giving us the opportunity to diminish the exposure to financing to about 35% of total cost of the project, and is usually utilized at the very end. So my control, or our control for risk, is tremendous. Because by the time we are using financing, which becomes our actual risk, we're fully sold. We have plans approved, engaged with a maximum guarantee price by a construction company. So all we have is execution risk. And anything like that were to happen, like COVID, you're insured for that. So that's the segment we're focusing on.
I have 3 minutes left, and you need to answer this question. But who's going to be the next president of the United States? I'm kidding. You don't have to. That wasn't the question. I just have 2 places. We are going to a presidential election that is key for both markets, for Mexico, for Latin America, for Europe, for Asia. I didn't say I have to answer. We don't have to be 6.
I'll tell you. It's called BlackRock, Starwood Capital, Goldman Sachs. That's the president of the United States. Doesn't matter what.
That's a good answer. But I want you guys to tell me before we leave and we close the panel, what's the outlook for the real estate market in the United States for 2025? I'm going to start with Hector.
I heard a very important economist in Mexico make a good analysis. Regardless of who the president wins, the only thing this Kamala and Mr. Trump have in common is the hate to China. And so the main focus is going to be to distance themselves from China. That's a huge opportunity for Mexico. And that's a huge opportunity for Mexican investors and for things to happen for people here.
Stefan?
So I think the whole point with China, it's also a risk for inflation, right? Re-inflation in the U.S. because if they impose all those tariffs and distance themselves, it's also for the developers, it puts itself as a risk. So it's another risk factor that can be brought. But so I think the outlook is positive. The U.S. economy is strong. When everybody thought there was going to be a recession, there's not a recession in sight. So I think that there's going to be a lot of more deals happening. Because the past 2 years, most of the people have set on it. A lot of people who bought their home with 30-year mortgages at 3%, 3.5%, they're not selling it. So there's been very, very little activity. So I think that 25 is going to be a very good year for new investments on potential new distressed assets and betting on the continuous growth of the U.S. economy.
Yeah, really quick, because I have to go. They're already telling me we're done.
Well, I believe the inflation rate continues to go down. That will allow the Fed to ease interest rates, and that would increase money supply, which is what every industry needs.
Awesome. I want to thank the 3 of you for doing this panel. I want to thank EXNI and this wonderful audience for being here in this panel this afternoon. Have an amazing night.
Thank you very much for your presentation.